Hello, everybody, and welcome to our session today, which is June 26, 2023. This is week 26, lots of 26s. And my name is Jose Blasco. Happy to be here to guide you, to help you to focus at the beginning of the week, as we do every Monday before the US equity markets begin trading in more or less 1 hour time. And we always get together to review the five most important markets out there, which I will mention in a moment. And we'll look at multiple parameters. We'll look at those markets from different angles. We'll look at those markets in 3D to get to understand risks, opportunities, and again, be focused as the week begin trading and hopefully help you to do a fantastic job in your trading and investment actions. So let's begin. I'm going to be switching back and forth between our newsletter and the real-time charts. The newsletter you can see here on the left. I mentioned five very relevant markets that we're going to cover. Those markets are the S&P 500, the crude oil markets. I am also highlighting in the bottom part of the screen our financial disclaimer. Gold, most important metal in the world, US dollar, most relevant currency in the world, and also bakkt Bitcoin, also most relevant in this case cryptocurrency in the world. So we're going to be looking at those markets. For the ones of you who may be new to seeing what we do and you have never seen this newsletter before, so I'm going to go over the content using real-time charts, as I said. But in case you miss it, or there is a 1 week where you cannot join us when we do this live stream, so we can certainly send you that in your email inbox. And the way for you to get it is very simple. You just need to follow the instruction on the screen. Either follow the link tradewithufos.com/3D newsletter, or just scan the QR code. It will bring you to the right place so you can sign up for the newsletter, which is free. And again, you get the information in a written form. So we're going to be looking at those five markets, very relevant markets. We're going to start with the S&P. This is how it looked like on the newsletter. You have the chart and all those parameters on the right, which I'm about to describe. But again, let's look at all of these using real-time charts. Let me make a little bit of space on the screen, so that way you can see everything. So what do we have when we look at this market? Well, if I was to zoom in on the bottom part of the screen, we are using a tool which is our auto climate. So if I was to zoom in and we look at the dot on the very right, which is the present, we can see that we have a red dot. So we have just entered a down climate, but notice the size of the dot. It is not what we call a thick dot. It is what we call a thin dot. And typically thin dots leads to not a continuous type of climates. We call it the climate is not confirmed. So there is a directional component to the downside, but so far it's nothing too aggressive, and therefore we may continue in the right climate, and it goes from thin dot to thick dot, and it continue going down. If that's the case, we should have an update in the next candle, or go back to blue, like here, for example, or here, for example, or here, for example. So far, again, statistics suggest that we don't know too much what's going to happen from a directional point of view. When we have a thick dot, the tool auto climate provides a much more statistical and powerful value, if you wish. In this case, statistics are not so reliable given the market condition that we have in front of us, which is a non-confirmed climate. So if you trade the daily time frame of the S&P futures, which is the market I'm charting, and you were to follow the same set of rules I do, then you would not trade this market until the climate defines itself. Of course, if instead of looking at the daily time frame, you are trading the 5-minute time frame, you're trading the 1 hour time frame, I'm pretty sure you're going to have opportunities right and left to execute your trades. But again, it's all about the time frames that you use, the trading style, the rules of your trading plan, etc., etc. So in this case, to try to make this as generic as possible, so it serves as many as you as possible. So we are using daily time frames, which may or may not be the time frames that you use. In any case, AutoClimate is a tool that you can get for yourself. It's a free tool that you can find on our website. So if you would like to utilize it, you just need to, let me highlight it on the screen so you know where to go. So you just need to follow the instructions on the screen. You go to our website on the apps section, tradewithufos.com/apps. You will see it there. You can just sign up for it, and that's it. And then you have it. Okay. Anyway, so what else is happening in this market? Well, very relevant, very, very relevant. If I zoom in a little bit here, so we can see how we didn't have that last week, but now we have two set of sell on field orders that were not available before. We also have buy on field orders. Those we knew about it, but the sell on field orders above, those are new and have a lot to do with this change of climate. So of course, having sell on field orders above price, you would expect the climate to progress to the downside and these thin dots to become red dots. But because we got buy on field orders very close by, my expectation would be that the market falls softly to the green UFO, from then bounces to the red UFO, and we may have a little bit of sideways action going from thin red dots to thin blue dot for a little bit until the market defines itself and then picks up direction in some direction, which will be then given to us by autoclimate. So again, a little bit of time for patience. There is not too much profit margin anywhere unless you trade the intraday timeframes, because the UFOs, the red ones and the green ones, are very near, very close to each other, suggesting bounces up and down with not too much price movement in either direction with the S&P. So sell on field orders located here, buy on field orders located here. Again, as I said, very close to each other. What prices are those? Going back to the newsletter, sell on field orders located at 43.93 and above, buy on field orders located at 43.69.5 and below. And finally, third dimension, we got the climate, dimension one, the UFOs, dimension number two, volatility, expected moves, expected distance for price to travel in a daily, weekly, and monthly basis is 37 points, 81 points, 170 points, daily, weekly, monthly, either up or down. This is volatility. This is not direction. Direction is given to you by the climate. Turning points is given to you by the UFOs. And now we are talking about speed of movement, either up or down, which is expected to be at a rate of 37 points a day, 81 points a week, or 170 points per month. Again, these are relevant figures where, when well understood, it really helps us to understand if it's time to trade or not, if it's time to trade directionally or not, if it's time to trade directionally or non-directionally, if it's, etc., etc. So hopefully this information is helpful to you. And if you have questions on how to use it, or you have questions in general, feel free to ping us and we'll be happy to help. By the way, before I keep going with the next market, I also wanted to point at the fact that the way we get to calculate expected moves is by looking at options on this asset, in this case, options on the S&P. So we look at those options, and options are priced based on multiple factors. And if you're not an options trader, you need to know that if you're an options trader, you know this for sure. But if you're not an options trader, you need to know that the prices of the options depend on what's expected from the options traders. Meaning that if traders expect a lot to happen, a big move to happen, they will be willing to pay more for the options. If traders expect less to happen, or nothing to happen, they would be not buying but selling the options. And therefore, the value of the options, the value itself, have a meaning built in, which we call the implied volatility. Is volatility which is implied, meaning built in, which when we take the options pricing models and we reverse engineer those pricing models, that's an oversimplification, by the way, but you got me. So we are now able to calculate those price points, 37, 81, 170, which is what the options market tells us is likely going to happen from a price, from a size of a move point of view. Very important, because the options markets are indeed very relevant because they are traded by the largest market players. And in that sense, this information is definitely very, very valid. Anyway, so I took a little bit of time here to go over the S&P. So I explained the three dimensions: the climate, the UFO, the expected moves. We now have in front of the screen crude oil. Let me load crude oil real time. And now what I'm going to do is I'm going to speed up, okay? So we can go over the following four markets at the speed of the light, so I don't take too much of your time. So crude oil, what do we have? We have a down climate, which is confirmed. So the expectation is for crude oil to keep falling down. There are no buy on field orders until we get to 60, 70. We had cases like that before, where we had nothing to stop price until much, much lower. And when that happens, these kind of moves happen. That happened not too long ago, just maybe a couple of months ago or something like that. So you've seen that before if you're following our sessions from time to time. So we have this particular scenario right now, a climate that is right at the beginning, plenty of room to fall for the markets to go all the way to 60. So that's where the buyer orders are. So we may see that happen. Now the market may be a bit more of a fighter and may decide to go back up. Well, guess what? In this case, if the market decides to go back up, there are no sell on field orders anywhere close. It's not like the last week when we did our 3D commentary where we got sell on field orders. They were located somewhere here, and as the prices went higher, they hit those sell on field orders, and that's why markets went down, because the sell on field orders were there. Well, we don't have sell on field orders here. The sell on field orders are all the way there. So we may get to see a change of climate before such a move all the way to 60. Again, AutoClimate will tell us. Ideally, you would have a red UFO around price. It's not available yet. So I guess patience is needed here, or you could certainly use options and do non-directional strategy using 70 UFO and the 58 UFO. All this depends on your styles of trading and how do you approach trading the markets. So climate, rainy, down climate, sell on field orders located at 74.53, buy on field orders located at 60.77. Expected move extracted from the options on crude oil futures is 1.55 points a day, 3.41 points a week, 7.10 points per month. That is the expected move, as I just mentioned. Gold is the next market that we are going to explore. So let's load gold real time. And here we are. And in this case, we are right inside of a UFO right now. So depending on your trading plan, time for action. Again, let me give you more detail about this. And of course, taking the trade or not and all of that is your decision, not mine. But I will tell you how I'm thinking about this, which hopefully helps. So climate is down and it's confirmed. So we expect gold to go down. Statistically speaking, gold has a higher chance for going lower than going higher. And gold has just entered an area, a price point, where we got sell on field orders, starting where the bottom dotted line is, all the way to where the top line is. And the current price of gold is right there. In other words, the expectation is that those on field orders kick in. And as they kick in, especially being a down climate, we would expect gold to fall. And if gold falls, there is nothing to stop it until we get to 1828.7, which is where the buy on field orders are. So if you were to use trading techniques like I do myself, so this anywhere in here could be a valid entry. In case I'm wrong, it would be welcome to set stops above 1980.4. So if you're wrong, this is the size of the loss you're going to get. And if you're right, setting a target located at 1828.7 would make a lot of sense, meaning that this is the size of the profit. So we're talking like a 2.5 to 1, almost 3 to 1, something like that. A trade that, looks okay. If you are a UFO trader using the same rule set that I do, which I am just presenting to you here for demonstration purposes, and obviously taking the trade or not and all of those things, all of this is your decisions. I'm just trying to educate you all, especially if you're newer to the market, so you understand how to think about trading. So back to the newsletter here. So climate is down, sell on field orders 1936.1, buy on field orders 1828.7, expected move 15 points a day, 34 points a week, 71 points per month. This is extracted out of looking at options on gold futures. Next market in line, the US dollar, most relevant currency in the world. 80% transactions worldwide happen with the US dollar. Not a surprise, the US dollar has been going higher in the past few days. And because it's stronger, then you need less dollars to buy other commodities such as gold or crude oil, and you've seen what's been happening to those markets. They've been falling. Why? Because the US dollar has been going higher. So again, very relevant market, but notice how we just changed to a blue climate, but it's a thin dot, like the S&P, right? The S&P is a thin dot red. In this case, it's a thin dot blue color, thin dot, meaning the climate is not confirmed, even though there is a directional component to the upside. Beautiful reaction to this green UFO that we were mentioning that already created a bounce last week, creating another bounce this week. So again, now changing the climate to blue will increase the odds for this market to reach the upper UFO. And from there, actually, we got two UFOs on top of each other. So we would expect the dollar to go back down all the way to 101.63. That would be the expectation. So in this sense, we are dealing with a sunny climate, up climate for the dollar, even though it's not confirmed. Careful with that. Sell on field orders 103.02, buy on field orders 101.63. Expected moves at a rate of 0.39 points a day, 85 ticks per week, 178 ticks per month. And finally, as we are reaching the end of the session, I still need to look at the economic calendar, by the way. We are talking about the Bitcoin. In this case, I'm loading Bitcoin future, to be more precise, bakkt Bitcoin. And we can see this very powerful move of Bitcoin trading at 31,000 something at this moment in time that changed the climate from what it was to blue a few days ago. And so we are in this blue climate, and we have a new generation of buy orders located at 27,420, and sell orders which are located where they were at 29,000 all the way to 31,732. So many sell-on field orders have been consumed because Bitcoin went way higher than 29,000, but it has not surpassed 31,732 yet, meaning that we are still in a territory where, careful, because even though the climate is blue, the sell-on field orders may bring it down and change down to a red climate again, and we get to see another fast move to the downside on Bitcoin. So this is something for us to watch. If you're in the trade long, beautiful, I would say time to take profits. Getting short a bit too soon, especially with the blue climate. But yeah, it's definitely something to watch because things may change in an instant, maybe tomorrow, maybe in the middle of the week. It will be a great moment for a great opportunity with Bitcoin. Expected moves, much more volatility in this market when looking at options on Bitcoin. Over 1,000 points a day, 2,000, 3,000, 2,300 points a week, almost 5,000 points a month is what is expected. That is almost double. I mean, not double, but 2/3 more than what we had last week. Anyway, economic calendar is the next subject for me to comment on. I also wanted to point very quickly at the fact that on our site, you will find courses and coaching materials, because for some of you attending this, either live or recorded, you may be experienced and you're just catching from this session what you need just to be focused and begin your week and do a great job this week, and that's it. But for some of you watching us, you may be newer to the markets and you may have interest in learning and getting serious about it. Therefore, the courses you will find on our site, or maybe the coaching activities that we perform, will be of your interest, and I will be pretty positive that it's going to be very helpful for you, but you may want to go and take a look and assess that yourself. So, economic calendar, I would say quiet but interesting week, if I was to mention it in some particular manner. Why? Because we got on Tuesday, durable goods, we got gross domestic product. Obviously, that fundamentally speaking is a big number for the US. But then we also have CPI numbers for Europe, CPI number for Germany, manufacturing numbers in China, which have all of these have to do with inflation. So again, nothing too major, but everything in the critical side, if you wish. Not critical in the sense of creating market volatility like crazy, unless something crazy happens, but definitely critical in the sense that those are relevant news to be reported this week. So something to watch, and I don't expect that much volatility in the markets this week based on news, but certainly important numbers, especially if you follow fundamentals. Anyway, books. Do you like books? Well, we are very proud of our Mystery to Mastery series. You can see the QR code on the upper left side of the screen. If you are interested in purchasing our book, just follow that QR code, scan it, or you just go to tradewithufos.com/book, and you will be able to find it and go to places to purchase it, either in paperback or ebook format. And the book comes with a course and also free access to our technologies for a number of months. So that could be very useful to you, especially, as I said, if you are in the process of learning how to trade. And by the way, not necessarily Forex, because while this book focuses on Forex, the reality is that you learn about the currencies, and once you learn about trading and you understand the currencies, so you are equipped with tools to trade everything, to be honest, because even if you trade futures, in the end, futures trading points and ticks, but points and ticks are currency. If you trade stocks trade in dollars, which are a currency. So in the end, this book is a great fundamental book for you to learn how to trade, even if in the end you don't end up trading Forex. So I certainly recommend you to go and take a look. And I'm pretty positive this could also be a very useful tool for your activities in the marketplace. In any case, I will say bye now. I believe I extended the session by a little bit extra 5 minutes of time, so apologies for that. Always a pleasure to spending a little bit of time with you here at the beginning of the week. If you need anything, shoot us an email or connect with the question section on our website where there is a beautiful forum. Post your questions, get your answers, interact with us. Happy to help. Feel free to email me directly. I will put on the screen my email. Actually, let me see. No, I don't have my email ready for me to share, but it's very simple. It's Jose, or you can find me on my page, actually, tradewithufos/Jose, or you can just send it to jose@tradictive.com. Anyway, everybody, you guys take care. See you soon. See you in the next one. Have a great trading week. Take care, everybody.